So the media is claiming, right, that what Tesla just recently announced is bad news. And they're baffled as to why, after this bad news, Tesla's stock price keeps on going up. Here's why, and here is exactly what Tesla did. Hello, my friends. Welcome to the channel. I'm the Electric Viking. Thanks for subscribing. Great to have you. Make sure you check out the 1,000 plus videos we've made over the last, I think, 9 months now since we started this channel. Great to have you here on the channel. I hope you've had an amazing day. This year is going to be absolutely sensational. Why? Well, so many new electric vehicles coming to market, so much new technology coming out, solid state batteries, sodium batteries, graphite batteries, even quantum batteries. Yep, quantum batteries. They will be the future in my view, but we're many, many years or decades away from that. However, let's get to Tesla. What's going on? Well, the Nasdaq.com website has like a news section, and Rick Smith from the Motley Fool shared this article on their site. Here's why Tesla stock keeps driving higher. Well, he claims that it's bizarre because the stock is going higher in light of bad news from Tesla. It's not actually bad news though. I'll get to why that is and why he's wrong. Tesla stock moved higher, rising 3.6% at the time of this video to a third straight day of gains. Now it's sitting at around $930. Now the Motley Fool says that that's strange, because given the big news on Tesla today, it should have gone down because it's bad news. As Bloomberg reports, rising interest rates on debt offerings, which make it more expensive for companies to raise capital, caused Tesla to suspend a planned $1 billion sale of bonds secured by revenue from Tesla car leases as collateral. A significant portion of the bonds had already been placed through fund managers since the bond offering began on March 7th, notes Bloomberg. But the sales were suddenly interrupted when short-term interest rate benchmarks moved sharply higher. This raises the prospect that Tesla won't be able to get access to all $1 billion of the expected fundraise, potentially disrupting its near-term financial plans. I mean, is this legit? Is this mainstream media actually telling any form of the truth? Will this, come on, will the fact that Tesla won't have access to this $1 billion of bonds or this $1 billion of funds mean it'll disrupt their near-term financial plans? Is that realistic? Well, I'll get to that in a second. That's the bad news, they say. Here's the good news. Suspending the offering might also mean that Tesla doesn't get surprised by high interest rates it must pay on the bonds. What's more, Tesla doesn't necessarily need cash from these bonds right away. According to the latest data from S&P Global Market Intelligence, Tesla's balance sheet boasts $17.7 billion in cash against only $8.9 billion in debt. And if you want to know more about the current financial position of Legacy Auto, because context matters, right? Context matters. If you want to know about the actual real position, how this reflects in comparison to Tesla's peers, I'll put a link in the description below to the video I made about the Altman Z score, which is a statistical benchmark measurement of the actual debt and finance health of a company. Tesla's health is, well, basically it's through the roof. Legacy Auto, it's very, very concerning. Anyway, check out the video if you haven't already seen it. The other thing to remember is with strong cash flows of $3.5 billion generated over the past year, the company isn't hurting for cash at all. At all. That even doesn't hold into account the fact that over the last, few months, Tesla just continues to raise prices, increasing margins. That means Tesla is actually entirely capable of self-financing its new projects, whatever those might be. I mean, it's already self-financed. It's already financed pretty easily the building of two of the world's biggest electric vehicle factories in Germany and Texas. So maybe the real story here isn't the obvious headline. Tesla had to suspend its bond offering. Maybe the real story is that Tesla's balance sheet is so damn rock solid that it didn't need to issue these bonds in the first place. And that's the good news that is driving Tesla's stock higher. Tesla shareholders who actually care about the company, not shorts, or people who just want to damage the brand, and are invested in the company for the long run, know this. And perhaps this is why Tesla's stock keeps doing better than expected, despite this so-called bad news. Now, you might be thinking to yourself, but there's always something that they could potentially do if they had more money. And I agree, more leverage is very, very valuable. The key issue here, though, is do you want more leverage at the cost of high interest rates? I think Tesla had to learn their lesson. Remember when they got those loans from the Department of Energy? And, well, they paid them off early, so they got charged additional fees by the US government for doing that. I think that's ridiculous that the government did that, but that's just my personal viewpoint. Well, maybe Tesla doesn't want to do that again, because the reality is, considering the fact that we're in a very high inflationary period of time, and considering the market is pricing in the reality that in all likelihood, the Fed will be raising rates, potentially raising the rates on these bonds, meaning Tesla paying more money for this than they potentially need to. It actually might not make sense. So if they were going to have to pay higher interest rates for these bonds, I can see the logic behind ending this process. Ultimately, really, the mainstream media, rather than painting this as a bad news story, they should be saying Tesla has put itself in an excellent, enviable financial position where they have the luxury of saying no to paying high interest rates. Do Ford, General Motors, and other brands, Volkswagen, have that luxury? Actually, they don't. Thanks for watching. Let me know in the comment section below what you think on this story. Do you agree with me? Disagree? Let me know what you think.